This is a broad depiction of what the stock market has looked like over the last number of years. And what you'll see is markets go up and markets also go down. Over the last century, we have seen 16 recessions. Over the last century, we have seen about 25 bear markets, meaning about 25 market crashes. So, markets go up, markets go down. But despite the 25 bear markets, despite the 16 recessions over the last century, the stock market has gone up by around 10% a year on average. That doesn't mean the markets always go up, but that means on average, despite the market crashes, despite the recessions, the stock market has averaged around 10% a year over the long term. And the problem is a lot of people get fixated right here into those months, maybe the years, where markets are going down or where markets are kind of sideways. But the reality is the way you win is by buying here, 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 here. You get the point. This is a strategy that I call ABB. Always be buying. That's how you win as a passive investor like this. By passive investor, I mean you're investing into these broad basket ETFs. The way you win is how you keep buying. When markets go up, you keep buying when markets go down, you keep buying when markets are sideways. Always be buying means you set up a system, whether it's every week, every 2 weeks, or every month, and you just keep buying. Because what's going to happen, this will happen at some point in the future because we will see another recession, we will see another market crash. It's not a matter of if, it's just a matter of when. The next time it happens, market's going to go down like this, and people are going to panic. People are going to lose their minds. Who knows what's going to cause it? Who knows if it's going to be caused by a pandemic, if it's going to be caused by a war, if it's going to be caused by something crazy happening in the world, or maybe some sort of financial bubble crashing. We don't know what's going to be the trigger. But when it happens, people are going to lose their minds. They're going to say that the financial system is ending, that this economy as we know it could be ending, the markets are crashing, people are losing their houses, people are losing everything. Get out while you still can. People panic. That has been a reoccurring theme decade after decade after decade, every time we see a market crash. Now what happens? People get scared, they panic, they sell. Markets go down. And that creates a good buying opportunity. I like to call this POOP. P-O-O-P. Panic leads to overselling, leads to opportunity, leads to profit. Yes, I like acronyms because it makes it easy to remember. Every time you think of a recession, every time you think of markets go down, I want you to think about poop. Because those market downturns create amazing poop. And you want to find that poop opportunity because that can create an opportunity for you to come in and buy. But the way you do that in this strategy is ABB. But the key is just to let the markets do their thing for the long term. There will be periods when markets go down. There will be periods when markets are sideways. There will be periods when markets are booming. We don't know what's going to happen tomorrow. We don't know what's going to happen next month. We don't know what's going to happen next year. Everybody has a prediction. Everybody has a prediction, but nobody knows for sure. And that's what we have seen is that the way to win is just always be buying. Now, if you want to increase your returns, because remember, what we're talking about right now is just that 10% return and how you can get to the $1 million portfolio. If you want to get to the $1 million portfolio even faster, what can you do? Well, of course, we can't necessarily change time. This is the one factor that we can't change. We can't go back in time and start investing 10 years ago. We've talked about now how you can increase how much money you invest by working to get a raise, working to cut back on your other expenses so you have more money to invest. What we've been focused on right now is just the basic 10% return. The last thing that you can do if you want to increase how you can get to that $1 million portfolio is increasing the return on your investments. And the way you can increase the return on your investments is by working to potentially take on a little bit more risk. But it's being strategic here. Because if you go to Las Vegas and you put all the money on the blackjack table, yeah, you can get a 100% return, 1,000% return. But you're probably going to lose. Higher risk, higher potential return. But now you have to understand the game. How can you get more potential return without taking on too much additional risk? And that could be now you going out and investing into your own investor education, into your own investor research, to look for more unique investment opportunities that have more potential upside. More risk, more potential return. Maybe now you start to look at individual companies. More risk, more potential return. Maybe you go out and try to find more unique investment opportunities. More risk, more potential return. There's a whole world of now different ways that you can invest your money, but just get started. The reason why so many people lose money in the markets isn't because they make a bad investment, it's because they don't invest their money. You gotta get started, you gotta be willing to lose money, you gotta be willing to go through a couple economic cycles, and then you will find the right strategy for you. You might say, I hate the idea of picking individual companies, I hate hate the idea of listening to earnings calls. I hate the idea of trying to value stocks and reading financial statements. I just want to ABB into the general economy. Okay, great. Maybe you say, Jaspreet, I want to be more involved. I want to read those financial statements. I want to find those more unique opportunities. That's enjoyable for me, and I like the more potential opportunity, and I can understand the risk. I understand that, yeah, I can lose all my money, but I'm willing to accept that risk. Okay, then maybe you can be more of an active investor. Again, Market Briefs is a free financial newsletter where we break down what's happening in the markets. But the whole idea here is understanding the game for you to build wealth. The more time your money has to grow and compound, the wealthier you will become. The faster you can double your money, the wealthier you're going to become, and the more money that you can invest, the wealthier you will become. And the wealth that you achieve, your portfolio size, is ultimately going to be a combination of these three things, and then you just got to put it into action. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.